Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, March the 4th, the year 2020. Let's talk trading. Day 3, the Walmal method. Now, it seems like some people are having a hard time understanding what the Walmal method is. And if you go back to day 0, I show the whole method. But before we go back and look at it again, let's just remember these videos are for educational purposes only, and your results may differ from mine and Walmal's. So, that being said, keep in mind trading is risky, boys and girls, and you can lose all of your money. So, if you're seeking trading advice, financial advice, investment advice, seek it from an accredited financial professional. That way, if you take their advice and lose all of your money, you know you took the advice from an accredited financial professional instead of some guy with some funny name posting YouTube videos, or you read something on a trading forum somewhere, or in an email, or on Instagram, or YouTube, or wherever. Facebook, Twitter, Pinterest. What's the other one? Reddit. There's so many forums out there trying to tell you how to trade. Anyway, let's take a look here. And remember, when you're using this method or any method, always have your money and risk management in place so you don't lose any more than you're willing to lose on any one single trade. That'll keep you in the game. Okay, Walmal method. Okay, we're going to go to the Walmal method and see here. These entry rules must be checked. Okay, he only trades between 08 and through the 1500, his GMT time. And he's saying he's only going to trade line breaks, either long or short. And he said he left off the zero from 0 through 90 every 10, and then 25 and 75, those two psychological points. And you only trade in direction of the hourly candle, the H1 candle. Okay. And so if you do that, and make sure you hit, it's the first line break, not the second or third, even though he doesn't say that, I'm pretty sure that's what he means, because that's what I've taught. And he's based this method off of what he's learned from my videos. So let's see, as we go right here, and we notice here on his screen, let's see, where is the 08 candle? It's the 13. So right here, this was the 08 candle. And so he would have gone short, and you see there was a 10, 20 pip possibility over those couple of hours. Right here, if you went short again, there was a 10 pip possibility. Here, if you went short again, there's another 10 pip possibility. Here, if you went short, you could probably picked up 5 pips. Okay, we're still trading here. This is the 1300 candle. There's a right here. If you would have went short, 1, 2, 3, 4, 5, 6 candles, you would have gotten your fingers burned. But I don't know if I would have gone short there. I mean, that's hairy hindsight. You would have gotten your fingers burned. But if you reversed right here and went long at the 80, the 2780, you could have picked up 10, 20, 30 pips and made up for your stop loss. And then here at the next hour, right here across the double O, there was a 20 pip trade again here, except these candles are now in the still, let's see, 1500 would have been the last candle to trade. Right here, 10, 20, a 30 pipper. So once again, he's picked a pair by using frequency distribution. He ran the analysis on price, and he sees here, high minus low in the H1 candles, greater than 10, 89% of the time, greater than 15, 70% of the time, greater than 20, 50% of the time. So you can see there's a lot of pips that you can make trading this one pair of the pound dollar. Okay. Now, on my screen that I've coded here. You see I've got the 25 and the 75 lines coded in. And you can see it's past time to trade right here. But even trading, when I trade, you can see here there was money to be made just by following the simple rule. You take the line, you trade the line break with the candle color at the line. I, I mean, that's it. You know, I can repeat myself for hours, but that's it. And another trader wanted to know about how can he trade the range, over 100. Well, the thing about range over 100 is that's when you start to look for reversals, like a rat zone trade or an ATR zone trade, where you're coming back off of the daily high or low after the pair has hit 100 pips. But you need to run a frequency distribution to see if that pair is going to have a daily range over 100 more often than not. So then if when it does, you look to see how far the high minus close and close minus low, the wicks are, and then you can trade the rat zone type of trade and pick up some pips that way. And another trader asked, can they use the 3-level ZZ indicator with the Walmal method? Look, we've only been doing this, this is day 3, and already somebody wants to add into it. I'm not trying to insult you or insult your intelligence, but before you start monkeying with the method that one trader has used to go from part-time to full-time trading, I think you should try and learn that method the way they presented the method. I mean, I haven't added anything to the method. I mean, I put some gauges up here just so I can see certain things, see the current range of H1, and I can use this to kind of time my entry. So if it's right below the line, but there's selling going on, I don't want to, buy in. But if there's buying, yes, then I want to get in. He's used the candle color multimeter, so you can look at the H1 and D1 and W1, and maybe you just want to go with the flow. And I mean, that's just pretty much how you do it. It's not difficult, but I know most traders, if you've been around for a year or more, you get flooded with indicators galore. You go out on these websites, and every week somebody's got a new method, usually involving squiggly lines and some, arcane indicators with these esoteric formulas that what is price, it's either going up or going down. And why people, actually I know why people get suckered into it, because it's human nature. These marketers know how to exploit human nature, and it's just that simple. But once again, here we look at these rules. He knows when to trade, he knows what he's trading. And he says, look on the hourly chart for any places where price may have struggled. So maybe you come in here, let's go back to his original chart. Maybe you scrunch the chart and see right here, you might want to look, that's where price struggled. Maybe in here, price struggled a bit. And you can see right here, just today, you can see how price was staying between these two lines, finally broke up, got in between them again, and then finally broke out to the upside. So that's just using your eyes, trading what you see. And that's pretty much what Walmal says. He says, and look at the previous H1 high, low, and midpoint. And he has those on his charts. And you can see here, price rocketed through that midpoint, hit the 50, took off, and you could have easily netted 10 or more pips on that trade, even though this is outside of his range here, where this would have been the last trade for Walmal right here. And if he took it, he got 10, 20, maybe 30 pips. That would have been like the trade of the day. Not to mention, if had he taken the one before, he's looking at 20 pips, and the one before that, he's looking at 20 pips. So if he just took those 3 trades, he's looking at 20, 40, 70 pips in a day. I'd be interested, Walmal, how you traded today. He has been posting his trades out there. When he does, I share them with you, viewers. But this method, you know, if you like trading the pound dollar, or if you're just new and you don't know what you like trading, I would highly recommend taking a look at it. One trader says, yes, definitely do it for a week, or we might just do it for a month. But what's going to happen is I'm going to be repeating myself day after day, and that's part of, really good trading is the repetition. And if it's profitable, then you just want to keep doing it. I used to call it milking the cow. You find something that works, like a cow gives you milk, you go out and you milk it every day. And you keep milking it until it stops giving milk, or until, the milk starts to run out or dry up. But you don't sit there and monkey with something that's successful. There's no reason to add, um, the 3 levels easy indicator here at all. None. No point, because you're trading at the horizontal lines. You're not trading a reversal. You're not trading a breakout. All you're doing is trading with candle color at the H1 line, with using the pound dollar between 08 and 1500. 08's the first candle you trade. The 1500's the last candle you trade. You trade the ones in between. Just use a little common sense. I mean, this is it. This is very, very, very simple. Okay. And he just says, once again, he keeps an eye on his statistics. And as always, he has a stop loss. So if you think about it, it makes sense. Why does it make sense to have that stop loss? Because if you're trading at a line, and if you trade long at one line, you'd be reversing short at the other line, so it's almost a natural stop loss. I mean, right here, if you went long here, let's just say price went up, you went long and it reversed on you, then right here you should have stopped, possibly reversed, and you could have maybe made up your losses. And like you said, if it goes up a few pips your way, if it goes your way for 3 pips and it turns around, just get out. It's like, okay, price isn't doing what you want it to do. This is not hard. This is his money management. This is something that you need to have. And sure, you might get wiggled out of a trade or two, but that's just trading. There's no reason to get upset or anything. That's just simple trading. And so right now, if we were using his method, you would be short at 60, long at the 70. That's simple. Now, if you look at the range, though, so far today we've gone over 100. Looks like what? 100 and what? 2 pips. So, if anything, I might start looking for a reversal. But if you trade the method as presented and don't monkey with it. If I'm going to start doing it live, so a couple people want to see some live trades, maybe I can get up early enough to get in at maybe the 1300 or 1400 candle, and we might be able to do a live trade or two. But I don't know if that's really necessary. From the simple standpoint is all you have to do is see it for yourself. If you can't trade it, a micro lot, a dime a pip, then if you can't practice what's a micro lot, then are you really trading? Are you really cut out for this game? I mean, you got to take a hard look in the mirror. If you can't risk a dime a pip, $1 per trade to try out this method, are you serious about trading? So, boys and girls, fellow traders, that wraps up today on the Walmal method. And just remember, as you're trading, it's not what you trade, it's how you trade it. So go out there and drain the banks like Walmal. Now, remember, if you're new, come down, click subscribe, click like, copy and share this video all over the internet, and click the like so maybe YouTube will show this video to more people. TheRumpledOne signing out.